Picture this. Back in 2015, the idea of a Bitcoin ETF was laughed off by Wall Street. It's too risky, too fringe, regulators will never allow it. Fast forward to 2024, spot Bitcoin ETFs launched and quickly brought in billions of dollars from traditional finance, legitimizing Bitcoin in a way that no bull run ever could. Now in 2025, XRP sits in a similar position, dismissed by some, underestimated by many, but quietly building. XRP is trading today at $2.95 per token and ranks firmly in the top 5 cryptocurrencies by market cap. And here's the twist. Institutions like BlackRock and VanEck are already building connections to Ripple's ecosystem through stablecoin rails and tokenized funds. What happens if XRP becomes the infrastructure behind trillions in tokenized assets, while most people are still debating whether it's even worth buying? So the question is, by 2030, is XRP destined to fade into the shadows of crypto history, or will it become the bridge asset for the next era of global finance? That's what we're unpacking today. XRP's present, the macro forces shaping its future, conservative and aggressive price predictions, real-world institutional adoption, the bear case, and finally, my personal 2030 outlook. And remember, this is educational, not financial advice. Always do your own research before investing in any crypto asset. The current state of XRP. Let's start with where XRP stands right now. $2.95, XRP is not some obscure altcoin. It's consistently in the top 5 cryptocurrencies worldwide, with a market cap that makes it one of the largest and most liquid digital assets. That ranking puts it ahead of dozens of once hyped projects that have faded away. Think about coins like EOS and EO, or even Cardano and Solana, which have seen cycles of excitement and decline. XRP's longevity matters. The long SEC battle that cast a shadow over XRP has largely cleared. Courts have clarified that XRP itself, when traded on exchanges, is not necessarily a security. That legal clarity has restored trust and reopened doors to US investors and institutions. Now, let's talk about institutional adoption. Ripple's payment network, RippleNet, continues to onboard banks and remittance providers. Its on-demand liquidity, ODL, service is already being used in corridors across Asia, Africa, and the Middle East, regions that desperately need faster, cheaper, cross-border settlement. But the game changer is integration with traditional finance. Ripple and Securitize recently launched a smart contract that lets investors in BlackRock's BUIDL fund and VanEck's VBIL fund swap their shares for RLUSD, Ripple's stablecoin. That means tokenized treasuries on Wall Street can directly bridge into Ripple's ecosystem. Think of it like this. It's as if Wall Street just built a highway exit ramp that goes directly onto the XRP Ledger. You don't have to drive through the back roads of crypto exchanges anymore. You can get there straight from the interstate of traditional finance. RLUSD is fully backed 1-to-1 and regulated under a New York DFS trust charter, which adds credibility and regulatory comfort for big institutions. Rumors swirl that Ripple and BlackRock are aligning more deeply for future tokenization infrastructure. Some outlets suggest XRP Ledger could play a role in BlackRock's long-term tokenization plans. BlackRock itself has denied any plans for an XRP ETF at this time, but their active use in RLUSD and tokenized funds is already a powerful signal. Combine that with the launch of XRP ETFs like Rex Osprey's XRPR and ProShares XRP ETF on the New York Stock Exchange, ARCA, plus filings by firms like Grayscale and Franklin Templeton, and suddenly XRP has multiple channels for institutional and retail capital to flow in. Daily trading volume now averages in the billions. That liquidity, combined with ETFs and institutional rails, makes XRP far more investable than many speculative altcoins. XRP isn't just a token anymore, it's starting to look like infrastructure. The global macro environment. Zoom out for a second. To understand where XRP might be in 2030, you have to understand the stage it's performing on. The global financial system is going through one of the biggest transformations in history. De-dollarization. Countries are exploring trade outside the US dollar, diversifying reserves, and looking for new settlement methods. In that world, a neutral bridge asset like XRP has a role to play. Second, CBDCs, or central bank digital currencies. Nearly every major central bank is building one, but here's the catch. Each CBDC will likely be its own closed garden. China's eCNY won't talk to Europe's digital euro. Nigeria's e-naira won't talk to Brazil's digital real. They need bridges. XRP was literally designed for this. Think about SWIFT, the current messaging system that banks use to move money. SWIFT is like fax machines. It works, but it's outdated, slow, and expensive. Blockchain-based settlement is the upgrade. It's instant, 24/7, transparent. XRP wants to be the fax killer for money. Now, at the rise of tokenized real-world assets, analysts project trillions of dollars in government bonds, real estate, equities will be tokenized by 2030. But a tokenized house deed or bond isn't useful unless it can trade, settle, and move across platforms. That's where XRP's bridge utility comes in. Picture this. You own a tokenized US Treasury bond through BlackRock's BYDL fund. You need liquidity at 2 a.m. Instead of waiting for Wall Street to open, you can instantly swap it into RLUSD on the XRP Ledger. That's the future Ripple is building toward. If you're serious about understanding where crypto is really going, not just the hype, but the systems and institutions behind it, hit that subscribe button. This channel is built for people who want clarity in a noisy crypto world. Price prediction models. All right, let's talk numbers. We'll look at 3 scenarios for XRP in 2030. A conservative case, $5 to $10. This assumes XRP adoption grows, but competition from CBDCs and stablecoins limits its role. It still doubles or triples from here, but doesn't dominate. Moderate case, $25 to $50. This scenario sees RippleNet adoption expand. ETFs bring steady inflows, and XRP Ledger becomes an important settlement layer for tokenized assets. That range would put XRP in the same conversation as Bitcoin and Ethereum in terms of market cap growth. In the aggressive case, $50 to $100 plus. Here, XRP doesn't just survive, it thrives. BlackRock, VanEck, and other giants integrate XRP Ledger into tokenization. Billions flow through ETFs, CBDCs, and tokenized assets use XRP as a core bridge. At $100, XRP's market cap would be multiple trillions, on par with Apple or the entire gold ETF market. To put it in perspective, if XRP hits $25, its market cap would rival some of the biggest companies in the world. At $50, it's competing with gold ETFs. At $100, XRP would be a financial powerhouse recognized globally. Now, I'm not saying this is guaranteed. Predictions are scenarios, not promises. But looking at Bitcoin's run after its ETF approvals in 2024, it's not unreasonable to imagine XRP benefiting from even a fraction of those inflows. The case for XRP. So why do people believe XRP could achieve those numbers? Let's build that case. 1. RippleNet partnerships. Major institutions like Santander and SBI Holdings have already worked with Ripple Solutions. This isn't vaporware, it's real companies using the technology. 2. Legal clarity. After years of doubt, XRP now has a regulatory foundation in the US. That's a huge green light for institutions. 3. International adoption. In Asia, Africa, and the Middle East, where remittances are lifelines, XRP offers cheaper, faster settlement compared to legacy systems. 4. Tokenization of real-world assets. Imagine tokenized real estate, stocks, or bonds. These need bridges to move between ecosystems. XRP Ledger can be the toll bridge collecting fees on every crossing. 5. ETFs and institutional rails. With XRPR and ProShares ETFs live, and BlackRock plus VanEck funds connecting via RLUSD, XRP has both direct ETF exposure and indirect tokenization adoption. It's a dual on-ramp for capital. What do you think XRP will be worth in 2030? $5, $25, $50, or even $100 plus? Drop your prediction in the comments. I'll be reading and reply to as many as I can. The bear case and risks. We've got to be balanced. Risks matter. Regulation can shift. Governments could clamp down hard on cross-border crypto. ETFs could disappoint. Many ETFs launch and fail to attract real money. Competition is fierce. Stablecoins, CBDCs, and rival blockchains can eat XRP's market share. And crypto is cyclical. Bear markets can crush even the strongest projects. If this balance breakdown is giving you clarity on both the upside and the risks, smash that like button. It helps the channel grow and gets this video in front of more people who need it. My personal outlook and strategy. So where do I stand? My conservative case, $5 to $10 by 2030. My base case, $25 to $50 by 2030. And my aggressive case, $50 to $100 plus by 2030. To me, XRP is a hedge and a long-term bet on the future of financial plumbing. I dollar cost average, meaning I buy a little at a time, regardless of price, to smooth out volatility. And I never overexpose myself. I think of XRP as portfolio insurance. If it succeeds, it could be life-changing. If it doesn't, it won't wreck my finances. Patience is key. 2030 feels far away, but wealth in crypto often rewards those who can wait through cycles, not those who try to flip for quick gains. If this deep dive gave you new insights, hit like and subscribe. This channel is for serious crypto thinkers, people who want to prepare, not just speculate. Now let's recap. XRP is trading at $2.95 in the top 5 cryptos by market cap. Ripple plus securitized integrations with BlackRock and VanEck funds through RLUSD are proof that XRP's infrastructure is linking to Wall Street. XRP ETFs are live with more filings in progress. Price scenarios range from $5 to $10 conservative to $50 to $100 aggressive. Risks remain, but the potential is transformative. XRP isn't just about speculation anymore. It's about infrastructure, tokenization, and the possible architecture of money in 2030. If you want to stay ahead of this story, subscribe and join me here every week. The next decade is being built now, and this is where we make sense of it together.